What if one earnings report could erase billions of dollars in market value overnight? What if another could send a stock soaring 20%, 30%, or even higher in a single trading session? And more importantly, are you watching the right companies this week? Earnings season is where excitement meets uncertainty. This is the time when companies stop making promises and start showing numbers. Revenue, profits, guidance, customer growth, and future expectations suddenly become more important than months of speculation. A single sentence from management during an earnings call can completely change investors' expectations for the rest of the year. This week is packed with companies that could make headlines across Wall Street. Artificial intelligence, semiconductors, cloud software, space technology, cybersecurity, data centers, and clean energy are all represented in this earnings lineup. Some companies have already released results, while others are preparing for reports that could become some of the biggest market-moving events of the week. Let's take a closer look at 9 stocks that investors are watching closely, and why each one could either explode higher or experience a painful sell-off. The biggest name grabbing attention is Palantir Technologies, PLTR. The company has become one of the biggest winners of the AI revolution, with governments and businesses increasingly relying on its software platforms. Over the past year, Palantir has transformed from a controversial defense contractor into one of the market's favorite artificial intelligence plays. The bullish argument is straightforward. Investors want to see accelerating commercial AI adoption, expanding profit margins, and stronger guidance for the remainder of the year. If management shows that demand for its AI platform continues growing rapidly, Wall Street could reward the stock with another significant rally despite its already high valuation. However, there's another side to the story. Expectations surrounding Palantir have become extremely high. When a stock becomes expensive, simply beating earnings estimates isn't always enough. Investors may demand exceptional results, and even a slight slowdown in customer growth or cautious guidance could trigger aggressive profit-taking. Sometimes, the higher a stock climbs, the less room it has for disappointment. Another major company that has already reported is onsemi, ON. Unlike AI-focused companies, onsemi is deeply connected to electric vehicles, industrial automation, and power management chips. Investors are trying to determine whether weakness in the automotive market is beginning to stabilize or whether demand remains soft. The optimistic scenario is that inventory levels are improving and customers are starting to place larger orders again. Strong commentary about future demand could convince investors that the semiconductor downturn is finally ending. The bearish case remains tied to slower EV growth and cautious spending by industrial customers. If management signals another few quarters of weak demand, the stock could continue facing pressure despite any improvements in quarterly earnings. Perhaps the most anticipated earnings report this week belongs to Advanced Micro Devices, AMD. Few companies sit at the center of today's AI boom quite like AMD. Investors want to know whether the company can continue taking market share in AI accelerators and compete more effectively against industry leaders. The excitement surrounding AMD comes from its expanding AI chip business. If management announces stronger than expected data center revenue, increasing customer demand, and improved production capacity, investors may view AMD as one of the biggest long-term AI winners. But expectations can become dangerous. The market already assumes AMD will deliver exceptional growth. If AI revenue disappoints, margins shrink, or management offers conservative guidance, traders may quickly lock in profits. During earnings season, even great companies can experience sharp declines simply because investors expected perfection. Another fascinating company is Astera Labs, ALAB, which has quickly become one of the newest stars in AI infrastructure. Its technology helps connect processors and memory inside increasingly complex AI data centers. The bullish story is easy to understand. As cloud companies spend billions building AI infrastructure, every additional server creates demand for faster and more efficient connectivity solutions. If Astera reports stronger customer growth and optimistic guidance, investors could push the stock substantially higher. One company that always captures global attention, even without publicly traded shares, is SpaceX. Although investors cannot directly buy SpaceX stock on public markets, its progress continues influencing companies across the aerospace and satellite industries. Every successful Starship milestone, Starlink subscriber update, or launch achievement strengthens confidence in the broader commercial space economy. Investors closely monitor SpaceX because its technological advances often create opportunities. Storage technology company Sandisk is another stock worth watching this week. The memory industry has always been cyclical, moving between shortages and oversupply. Investors are eager to hear whether demand for flash storage is recovering as AI servers, smartphones, laptops, and enterprise systems require increasingly larger storage capacities. The bullish case centers on improving pricing and healthier inventory conditions. Rising memory prices typically translate into stronger profitability. One of the market's most controversial momentum stocks is AppLovin, APP. Originally known as a mobile gaming company, AppLovin has reinvented itself through AI-powered advertising technology. That transformation has attracted enormous investor interest. Supporters believe AppLovin's advertising platform is becoming increasingly efficient, allowing customers to generate better returns on marketing spending. Strong revenue growth and expanding margins would reinforce that narrative and potentially send shares even higher. Networking company Applied Optoelectronics, AAOI, has quietly become another favorite among AI investors. As cloud providers build larger AI data centers, demand for high-speed optical networking equipment continues rising. Yet AAOI has historically been one of the market's most volatile technology stocks. Small changes in customer orders, shipment timing, or production forecasts have previously caused dramatic share price movements. Investors should expect significant volatility regardless of whether earnings beat or miss estimates. Finally, there's Oklo, OKLO, one of the newest names attracting attention in advanced nuclear energy. Although the company is still in its early stages compared with established utilities, many investors believe small modular nuclear reactors could play a critical role in powering future AI data centers. Why does that matter? Artificial intelligence requires enormous amounts of electricity. As energy demand continues rising, companies developing next-generation nuclear technology have attracted growing interest from both institutional and retail investors. So here's the question. Which company do you think has the biggest chance of shocking Wall Street this week? Will AI continue carrying technology stocks to new highs, or are expectations finally becoming too difficult to satisfy? The answers will arrive one earnings report at a time, and they could determine the market's next big winners and losers. If you enjoyed this analysis and want more in-depth coverage of the biggest market-moving events, be sure to like, subscribe, and turn on notifications so you never miss the next breakdown of the stocks shaping the future of investing.